You have got to see the Nvidia stock price prediction and earnings projection that I have for you for Nvidia earnings Q2, the second quarter here of fiscal year 2025. I'm pretty darn excited to share this thing with you. I'm going to put up the numbers first. We'll take a look at those, and then I'll also give some outside commentary, especially for some stuff from last earnings call and some things that might be lurking in the background and on the horizon for us for this next Nvidia earnings coming up on August the 28th after the market closes, because I want to be prepared for it and I want you to be prepared for it too. And I'll tell you exactly what I'm doing with this. I'll tell you what my price prediction is, the Dr. Stock price prediction for Nvidia in the next 12 months here. So it's going to be, I'm really excited about this, guys. So let me put up the numbers first. The stuff that you see highlighted back here in yellow, these are all the projected earnings. This is just the stuff, the estimates that are out there. It is some stuff from Nvidia themselves based on what they have forecasted for this coming quarter, and then also I've extended onto that for what I think could happen throughout the end of this year, and we can compare that when we get to the charts. We can compare that with what the professional analysts out there are saying as well. So looking at the numbers with the white here, this is stuff that's actual reported values from one quarter a year ago. So fiscal year 2024 is 2023 is for the calendar year. The 2024 calendar year is fiscal year 2025 for Nvidia. So when you see FY 2025, that's fiscal year 2025. That's how they run their calendar for their company. So quarter one to quarter two, and you'll notice the little E here, that's for estimated. So when you look at that, this 28 billion, now mind you, all these numbers are in million anytime that you see the dollar sign besides the EPS that are down here. That's what it says, except EPS, just like what they would report as well. So this 28 billion is plus or minus 2%. I like to be right in the middle for that. As a matter of fact, Nvidia themselves likes to go to the upside, so this is actually a conservative number. I think that they put things out there that are easy to hit for targets coming up for them, things that they can expect to have happen. So something that we have to watch out for, we made like almost 100% jump from what we saw from quarter two of last year to quarter one of this year. So just over 3 quarters, about 100%. You'll notice sequentially, not that that's a year-over-year number, but sequentially we're not making that sort of leap anymore. I will say on a year-over-year basis, when we compare this quarter to last quarter, it's going to be about double. Just so you know, I'd be actually really surprised if it wasn't over double. So that's what we have for right now, and what we have coming up then when we start to get to further into these quarters is that we start to see those numbers start to pull down a little bit. And I know that you're probably seeing some of this red over here, and maybe you're getting a little bit worried. We'll talk about that. So these other numbers that are out there, I have gross margin coming in about 21 billion. And that's using their number of 74.8%. That's actually the low number for gross margin. That's another thing that makes these values down here for earnings per share, that makes them conservative. That makes them less. I believe what we have from the average from the analysts that are out there is 64 cents. They could be using some less conservative numbers while they're cooking those up there. I like to come in low for a stock that I'm bullish on because I don't want to come in high for that. I did that for Tesla this last time, and it just wasn't great. I kind of broke my normal routine of being conservative when I project these things for companies, like I said, that I'm bullish on. So operating expenses thought to be around $4 billion. That was, again, that was a number that was from Nvidia themselves. And then from that, I figure that we're going to get about a $16.9 billion operating income, which is crazy to think about these numbers just for a single quarter to bring in that kind of money, but I guess that's why they're worth trillions, and I think they're going to be worth trillions more. I'll be honest with you, and we'll take a look and see exactly what I mean by that soon. So net income, and now mind you, they split this apart into a net income on a GAAP basis and a non-GAAP basis. So that's generally accepted accounting principle basis, and then stuff that would not necessarily fit in. And that what non-GAAP does is not that it's not accepted by accounting. It's just not the generally accepted part. It's the part that allows the nuance for each company to account for financials in their business that might not fit the typical mold. So that's another thing, by the way, that makes this 61 cents down here. One thing that makes that conservative is that typically the net income is higher on a non-GAAP basis, and I'm using that single metric. So for this, like I said, the average analyst estimate coming at 64 cents, that could actually move this up significantly by any number of factors, by the revenue, by me using a low gross margin. So the revenue is low, the gross margin is likely low, The net income is likely low. So we have a lot of lowballing factors here pushing us down to 61 cents. And that's also another reason why some of these parts that you see here, some of the quarter over quarter changes for the estimations are red. In other words, coming in low from what you can see on your screen right here. So gross margin dropping, that's already expected. That's already priced in. You don't need to worry about that one. What we want to do is look to see where that goes from here. And another thing that Nvidia said in their last earnings call is that that's probably going to come in at a mid-70s average for the entire year. So all the way out through Q4. So I'll show what that is as well, because like I said, I have those projections for the full year as well. So I'll show that soon. You can kind of see a little peek of it over there. So when we move on from there, operating expenses have moved up 14.4%, whereas your gross margin's going down. And then when you look at your operating income, pretty much flat. Net income, pretty much flat. Diluted EPS on a GAAP and non-GAAP basis, pretty much flat. I think we're actually going to have some growth here. And so I think that's going to be almost immediately alarming to people if we come in towards these numbers. If Nvidia stepped in a hole like I think that they might this quarter because of where they happen to be with the supply constraints and the ability to pull that revenue into this quarter, that could be something that's mitigating to the results that they have, but it's a very big boon for looking forward from here. Now, mind you, I did read about a delay on some of the Blackwell 200 chips that they're producing with Taiwan Semiconductor, that there was some error in the design or some flaw that was there that was noticed late in the process. So they said it would be about a 4 to 6 week delay in order for that to happen, which is about a month to a month and a half, which is like a third to a half of an entire quarter of a year. So that is something that could show up in Q3. I think it's going to smooth out over longer time horizons, though, as we look at these numbers. So as a low ball, I think that this is going to be one of those quarter over quarter times that we have lower numbers here compared to what we're used to with Nvidia, but like I said, a lot of that is already priced in to where we're at right now. And I'll give a more of a context to what I think the price action is going to do or could do as a result of this earnings. Right, for right now, let's look at the year-over-year numbers. So from these projections, we're pretty much doubling last year's revenue. We're more than doubling the gross margin, and remember, that's at the low end of what we're doing. These are conservative numbers that we have here. And then year over year, the gross margin still increasing, still expanding. That's a good thing. I think that we're probably going to rock somewhere around the mid to low 70s for a more of a longer term run, especially as we get through 2025. We're going to have to see how that goes. Operating expenses up 50% from what they were a year ago. And I think that for the entire year, it's supposed to be about 40% higher than it was the last or throughout the last year that they had, 2023. So 2024 is supposed to be about 40% higher, which means that we'll probably might pull back from this just a little bit by the time that we get to the end of the year. We're going to have to watch for that. Operating income up about 150%, so doubled and then half again. And then net income doubled and then almost half again that we have here. And the EPS growth is also very significant. Now, what do I have projecting outward from there? I actually need to adjust this because what I have here for you, this should actually be Q3. That's up here. And then this one's Q4. So these are my estimates. These are numbers that I've made up that I'm projecting out for the rest of the year for 2024. So this really gets into a projection that you're probably not going to see too many other places. I've watched some other YouTubers talk about Nvidia for their earnings coming up, and they're very vague and they're very general. Here are all of the numbers right here for you on YouTube, and these are ones that I've cooked up myself. We'll see how they compare as time goes on, and I will adjust these estimates as we find out more. As a matter of fact, I can really update the Q3 estimates when Nvidia puts out their projection for what they're going to have for that. But this is what I see coming for us. So for the full year, they said mid-70s, so I have it at 75, which means that since we came in high for the first quarter and mid for the second quarter, we got to balance it in the next two quarters if we're going to be in the mid-70s. So that's why you see the balance for the gross margin that you have here. I think that the revenue that we get, I think I have it staying steady right now at 7.5%, even though I think it's going to expand. I think it's going to rebound from there. I think we stepped in a hole with the revenue, with where we find ourselves with the supply constraints, although the demand remains strong. And so that's something that I think is going to be a boon to us. I think that's really going to be buffered throughout the end of this year. If it doesn't happen in Q3, I think it pushes in Q4. And I have evidence as to why I think that is as well. So let's move on from there. Operating expenses, you can see they're still climbing up. 16 billion for the year, and then operating income also still climbing pretty darn wildly, by the way, from where we're at. So we just want to watch for that as well, because I think that that's going to be very, very good for us. And then when you look at net income, still moving up strongly on that one. And then going from 63 to 65 cents, I think we're really going to have a good, strong fourth quarter to this, closing up high on this one. And if you look at the analyst estimates, they also tend to agree with that. Although I will say for the full year, maybe they think that Q3 is going to be a little bit stronger yet, and maybe I really am lowballing it too much, because they're actually up in the 270s, and I'm at 262. So I'm below that average on this. But like I said, conservative estimates on this for Nvidia, because I don't want to get overly bullish and think that I should be shooting for the moon on this thing based on my projections, and then have the floor dropped out from under me. That doesn't sound like a good time, and I definitely don't want to mislead you guys with that either. So when we look at that, I have forward PEs based on the numbers that I have from today, or from last close price of 128.17, based on the number that you see here for end of year 2024, and then 25 would be this one. So 49 dropping down to 44.3, and honestly, I think it's going to be much lower than that based on what I have here for you. So I'll get to my price predictions soon. I want to go through a few other details. Let's put those numbers down and get to some evidence that we have out there. And let's first pick the last earnings call that we had. So I dumped the transcript of that earnings call over into a Google document, and let me zoom in 150%. And I'm not going to make you read through the whole thing. I'm just going to go to some of the highlights that we have here. So we are working to bring up our system and cloud partners for global availability later this year. So that was in Q1. I think this second half is going to be big. Q2 ends the first half. I think the second half for Nvidia is the time of this year where they're going to shine even brighter than where we saw them in the first half, especially as more Blackwell comes online. Demand for H200 Blackwell is well ahead of supply. Right there's some of the evidence for that claim. We expect demand may exceed supply well into next year, so that takes us into 2025. We are also proud to see supercomputers powered with Grace Hopper taking the number 1, 2, and 3 spots for the most energy-efficient supercomputers in the world. I don't know if you guys know this or not, but one of the hot topics out there right now with all this AI push that there is, all this AI infrastructure build-out, is where in the world does the power come from? So that could be something that really brings something like nuclear to the forefront of that, and maybe even it includes some fossil fuels. I'm not exactly sure, but wherever we can get that power from. Now, mind you, renewables could also benefit from this. If we're looking for cheap power, renewables really can be the way to go, like hydroelectric power, for example. I think Canada might be a huge producer of that, and they're a nearby neighbor of the United States. Just some thoughts that I have. So let's get back into this. So we are expecting networking to return sequential growth in Q2. There's a boon for Q2, by the way, as we read that. Something that helps out Q2's earnings. Spectrum X is ramping volume with multiple customers, including a massive 100,000 GPU cluster. So again, huge talking about demand there. We expect Spectrum X to jump to a multi-billion-dollar product line within a year. So within a year, that's from last quarter. So that means within a year, that means within now, from Q1 all the way until we get to Q1 of 2025. It's within that year. Again, more evidence why I think the second half is going to be the half where we shine. Even though I don't know that Q2 is going to be stellar, at least as far as a quarter-over-quarter basis goes. I think that the guidance that we get for either end of year or even Q3 itself, those two things I think are major things that can really, really help us out for what's coming up for the earnings that we get, and then ultimately the price action that we see in the stock over a longer term. Even if it's not immediate following earnings, I think the longer term, I think is really really where that super impressiveness comes out of this. So let me put this back up here. So scroll and scroll, and Blackwell's a giant leap with up to 25 times lower TCO, by the way, is total cost of ownership, I believe, in energy consumption than Hopper. So 25 times lower power consumption. I'm telling you that when it comes to data centers, that power is like a huge cost thing for those data centers. It makes them expensive to run. So if they can run them cheaper, and they can also compete on a global scale with the rest of AI and provide those products and services for their customers, and NVIDIA is the one who can provide them the infrastructure to do it, that's more demand for NVIDIA. Let's go on. So Blackwell, time to market include, yep, got that. That's all the big tech that you have out there. Now, mind you, the important thing to the big tech mentions that are here, the big tech, they are the ones leading the war. They are leading the charge with AI. And when I say war, what I mean is that there's going to be a fight for dominance. Mark Zuckerberg said as much talking about Meta and the fact that like this is something that he intends to win. And he is an absolute bulldog when it comes for fighting for his company. He's a great CEO to have for Meta. Just look at the stock price, the growth that they've experienced over time. Yeah, there was the metaverse when they made that switch, but man, oh man, when it was proving to be something not so fruitful for them, he just turned it around within a couple quarters, and now we're close to all-time highs, if not at all-time highs, for Meta stock. Just so you know, Amazon isn't going to want to be left behind that. Google's not going to be one left behind in that. Microsoft is not going to want to be behind on that one. Sovereign AI is another huge one that nations don't necessarily want to put out that data across international borders. They want it in-house. They want to build that infrastructure within their borders and keep that data within their borders and keep it, like I said, that's why it's called sovereign AI, and not sharing that data, not sending it outside of that. That's going to be further demand for those NVIDIA parts and services, especially because they are full stack. They are fully vertically integrated, that they offer solutions from the infrastructure all the way through anything that would be needed for the software. And we'll go on from there. So just more to think about, more to keep in mind for why I do stay so bullish on NVIDIA, even though they've run up as high as they have. So moving on from there. Let me see. No one is going to be surprised that Blackwell is coming, and the capabilities would like to deliver with Grace Blackwell. So that's the CPU part of the system. GB200 is going to be exceptional. So just more excitement there. Let me keep moving. This video is getting long. So guys, let me just move forward. I have a comment here. So we see increasing demand of the Hopper through this quarter. That means quarter one, because this is the last earnings call that they had. Quarter one of fiscal year 2025, but I think it informs us or reminds us what to look out for the subsequent quarters that are coming up. It says we expect demand to outstrip supply for some time as we transition to H200 and as we transition to Blackwell. Everybody's anxious to get their infrastructure online. They're saving money and making money. They would like to do that as soon as possible. And something that I just commented on, just a thought that I had as I was reading through this, the Fed is getting towards a rate cutting cycle. And even though that might not be immediately bullish for stocks that are out there, eventually as that money becomes cheaper and lending standards are something that are relaxed and that monetary policy is eased, well, we can get access to capital. Not we, but like companies, like those small cap companies that are more sensitive to those interest rates, they can take on cheaper debt. And that means that they could possibly, if they are trying to join this AI race for things, that can again include more demand then, because companies are able to expend more capital more cheaply in order to be part of this. So just another small thought that I have. So let me see this one here. This speaks to tight vertical integration. I've already mentioned it. And here we go. This one, guys, I can't stress this one enough. When we look at this one, this I think really makes the case for the software side of the buy-in for the hardware infrastructure that NVIDIA has made. So here's what it says. And so the versatility of our platform results the lowest total cost of ownership for the data centers. Second, we're on every cloud. And so for developers that are looking for a platform to develop on, starting with NVIDIA is always a great choice. And we're on-prem. On-prem means that they're on premises. It means that they are there on site. It's not all just cloud. So they also say that they are in the cloud. So they're local, they're global because they're in the cloud. We're in computers of any size and shape. We're practically everywhere. And so that's the second reason. So what I say over here in the comments, and I'll read it off to you because I know you probably can't see it. So if you're a developer, do you develop for like the Amazon App Store? I don't know if you've ever been on the Amazon App Store, but like the biggest apps are on there, but like any other apps that you would want that aren't part of the biggest companies, there's not a lot of people developing for them. It's not a big enough store for them to really make money off of it. So they don't really spend a lot of time doing that production, even though it's an Android-based operating system and you can totally use the Google Play Store. Well, don't you just develop for Apple and don't you just develop for Google if that's where the money is? So if Nvidia is everywhere, if Nvidia is so widespread, why wouldn't you just develop for Nvidia? There's job security in that if there's so much development that's out there. I think that's another thing that speaks for what we could have for Nvidia. By the way, I just realized I didn't have this up here for you, but this is that line from the past earnings transcript where they talk about Nvidia being everywhere, and I'm just saying for the developers, more developers are probably coming online for Nvidia themselves, training themselves, practicing, doing professional development to develop for Nvidia because of the fact that they are everywhere. So moving on, I think we hit most of the highlights here. Nvidia working to be the best value add, the lowest cost of ownership. We've already hit those highlights, so you guys get the idea from that one. So every claim that I make here has some substantiated piece to it, and it could be something that is from the earnings call, and it could be from other sources that are around. It could be from the numbers that I worked up. It could be from the charts that we're looking at when we go and take a look at the stock charts. So we'll get to the stock chart last. I want to put the numbers up just real quick so that way you get my price prediction, and I'll also show you what it looks like on the charts then. So let me drop that down and put this up here for you. So despite these low numbers, there's a few things I want you to keep in mind. So hopefully you're still tuned in. Hopefully you're here because I know that this video is getting a little bit long, but this is important. So let me scroll down here. This is definitely a low estimate. This is definitely a low ballpark. I've mentioned that we're in between product cycles. We have industries still waking up to AI, still trying to figure out how to leverage AI for their business. They are just getting started. There's a lot of people that they flat out don't know. They're still trying to find out how it applies to it. That figuring out time is likely not going to be short. They might have immediate benefits from the use of AI in their company, but how to most optimally leverage those benefits is going to take time to do that. Full stack integration on behalf of Nvidia. Developer draw. I already mentioned that one as well. And I also talked about the big flashy finish to the year for all those reasons that I just listed up above there. But there's more. Oh gosh, there's more. Guys, look at my face here. There's more. So more reasons to be bullish is what I mean by there's more. By the way, it's late and I'm feeling weird, so fishy face, right? All right, here we go. Get excited here. I'm going to take a sip of water. You take a breath. Here we go. And some high quality H2O. Thank you, water boy. Here we go. Here's what you should be excited about. $25 billion in share repurchases. They have about $10.8 billion of share repurchases remaining from that $25 billion that was announced in August of 2023. Still about $10.8 billion to go. When they repurchase shares, they make the shares that people own more valuable, which means more reason to be bullish. Furthermore, there's more reasons. Like, listen guys, do what you want, have your own reasons, have your own research and due diligence. I'm not going to tell you what to buy or sell. I'm just telling you why I'm so excited, especially if the price drops. And keep that in mind, especially if the price drops. If the price drops like we saw back with the carry trade, whoo, man, oh man, I'm loading up. And this time I'm not going to be at Hershey Park when it happens like last time. Of all days to be out with the family, don't regret it. Love my family to pieces. It's why I work so hard. It's why it's 1:44 a.m. and I'm still recording here. It's to provide for them. So let's move on. Furthermore, Q3 could have a dividend increase. We already saw a dividend increase. But Q3 is typically when that dividend increase gets announced, usually in November. So November rolls around, we can see that dividend increase. Will they go up to 2 cents per share, up from the 1 cent per share that they're at right now? I think with a cash-rich company like this that has so much demand on the horizon, that they are going to keep treating their shareholders like kings. And I think not only do we get repurchase of shares, but I think that we also get a dividend increase and we have a rock star company on top of it. Those are the reasons, guys, why I'm so bullish on Nvidia stock. We'll get to the charts in just a moment. So here we go. The Dr. Stocks Nvidia stock price prediction. Sometime over the next 12 months. We could be anywhere from 155 on the low end to a conservative 170 on the high end. That's if everything goes as I think it could go and as other analysts who are out there think it could go. I'll show you that. Give me just 1 second here to transition and I will show you that they think it's the case. So here's my chart. Don't worry about the mess. Look up here, 12-month high 170. We got all sorts of resistance up there. 12-month low. Not meaning that it's going to drop low, not a low price, but my low bullish target on this is 155. All that resistance, I think we're going to blast through the 140s. I think we're going to push past 150. I think 150 is about where we're going to get at the very least on the high end. I think we can push up there. I think we can push to 170 if we make it above 170. So just in case people are even more bullish than I am, just to tell you what's ahead, we have critical resistances at 185, 191, and 200. You can come back to this video. You can put it in your saved videos. You can come back to it for next earnings. You can come back to it in a year, and you can see if I'm full of crap or if it actually happened. I don't mind. I don't think I'm wrong. So let me show you something about their financials. So let me go to their earnings. We'll hit more info. We'll drop that down. And what we're looking at on a quarterly basis, these are the earnings that they expect, they being the analysts. 64 cents is the estimate. And all of these are, well, let me see. We missed back in 2022 during the semiconductor shortage. Then we beat. We're probably going to beat this time. I'm just guessing. Probably these other times that follow, we're going to beat then. And even if we don't, I still gave a lot of reasons out there that I think that it's going to be a good time for us. On an annual basis, 2024, 272. I had it like 265-ish, I think. 379 for the end of 2025. So that's a big jump to go from one to the other like that. That is about a 30% increase for a massive company already. When we got to 2026, we go up to 445. So we get another 70 cents on top of it. That's about another 20%. So it's slowing down, still massive. And then from there, it goes up to 531. So from 445 to 531, it's 86 cents up above that. So it's not going to be 20, it's going to be like 17-ish%. So let's say 30 to 20 to 17% earnings growth that you get over that time. And when we look at revenue, we go from about 28.65 billion to 31.5 to 34.6, so almost 35 billion up to about 37 billion. For the quarters, and when we look at that annually, here's what the analyst estimates have it at, and I know it's going to be hard to see. I'll read them all for you. 2024, 121 billion, rounded to the nearest billion, of course. 2025, 168 billion. 2026, 197 billion. And then when we move out to 2027, we get $230 billion in revenue. So if we back that up to what we have for 2024, they expect revenue doubling between the end of 2024 and then 2027. So over 3 years to double, that's incredible. That's really good. Zoom out and I'll show you the path that we've been on. It's been a good path, by the way. It's been a great path. Great ride. 155 is up here, which kind of follows along a trend line. If you go kind of through the middle of all of that, there's a trend line, there's a path that's there. I think we could totally get there, and my cursor's only in October. 170 was the high side of that, and we're still within 2024. There's still a path to 170. Listen, it doesn't mean it's cheap. It means that growth still keeps on going. It means that everything remains strong. But guys, I did say that I wanted to make sure that I put a quality product out there for you. I'm a couple hours later than I wanted to be on this one, but given the technical issues, I'm okay with this. Plus, I decided to push it for quality. I'm going to go get some sleep. Guys, if you want to support my channel and support the work that I do here, if you think I'm bringing that value to you, please consider the link down in the description for that Patreon. We'd love to have you over there as part of the Discord community. That's where I post my buys and sells. That's where you can talk to me and my community members. It's a very friendly, very nice place to be, and we all absolutely love everything finance, and we'd love to talk about it with you. Also, down in the description, you'll find a link for a technical analysis trading course. For that course, if you use the code word doctor when you sign up for it, you get massive savings using that code word. So go ahead and try that out. I got a chapter in there on options as well. It is in Stockmo Academy. It uses the bread recipe trading strategy. It is a great strategy. You should absolutely check it out. Thank you guys for watching. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.